Hey, it's Tom here and welcome back to the channel. In this video, I'm going to give you my personal highlights of a recent interview that was done with Li Lu. Now, Li Lu is one of my favorite investors. He's the only investor that Charlie Munger has ever put his money with, and he also is someone that doesn't often do interviews, so I was really excited to see this one come up. Li Lu, for those who don't know, manages Himalaya Capital. It's sort of a focused value investing firm, and he has a phenomenal track record right all the way back to 28 years ago when he was investing his student loan money as well as doing 2 degrees and recently moving to the US. So he's got a phenomenal story. He's a great investor, and he went through basically a whole lot of really interesting lessons throughout this talk, which was done between himself and Bruce Greenwald, who's sort of a value investing teacher at Columbia University, kind of following on in the tradition of Benjamin Graham. So I do hope you enjoyed the video. I will leave a link down in the description below to the full interview with Li Lu if you want to go and check that out for yourself. It's about an hour and a half long, but I definitely recommend checking that one out. But for now, let's get into my personal highlights, and I hope you enjoy. Alright, so the first thing that was covered in this talk was basically a history of Li Lu's investment strategy. He has been value investing for about 28 years after initially hearing Warren Buffett actually come to speak at Columbia University in one of Bruce Greenwald's classes, and that really kind of set him off from there. He has had a sort of bit of a change in the way that he actually uses value investing in practice over that 28 years, but really fundamentally the idea of trying to buy something for less than its intrinsic value still remains the same. But nonetheless, let's kind of get into Li Lu's transformation over those 28 years. So Li Lu basically starts out by saying when he first started investing, he really didn't know much about how to analyze businesses. He'd recently moved to the US from China. China at the time was going through a huge amount of reform, and there weren't any really free markets and, capitalist societies for him to try and understand businesses. So the way that he really started out was very much the Ben Graham cigar butt type investing, of really focusing on the balance sheet of a company, looking at its assets and its liabilities, and trying to buy businesses that were trading at prices that were extremely cheap compared to sort of the net assets of those businesses. And he said that investment strategy basically treated him really well, but over time he actually began to learn more about how to analyze particular businesses, and that sort of brought him to kind of the second stage of his investment philosophy. And this one I was actually a little bit surprised to hear, but it's a very interesting part of Li Lu's journey nonetheless. And basically that was starting to invest in smaller businesses, and even businesses that were so small that he was co-funding them as startups, or he was actually helping to sort of co-create them when they were in the startup phase. And the couple of core learnings for Li Lu at that point were really helping him to identify what makes a good business and what makes a poor business and what makes an average business. And that really helped inform sort of the third stage of investment that he currently sits in now. So he's now started to invest in really good businesses. So he's gone from basically a balance sheet focus where the business doesn't matter at all. It's basically just what does the company own? We can liquidate it tomorrow and make a profit kind of thing. So the profit engine of the business is really not that important. Through to smaller businesses, early stage businesses, and now through to buying really good businesses, and also having to focus more specifically on Asia, and sort of more specifically within Asia. He really focuses a lot on China, which I will get to later in this video. He had quite a few comments to make on investing in the Chinese stock market. One of the things that I picked up from that sort of journey that Li Lu has gone through is that he's certainly not the only investor to go through that journey. It sounds very, very familiar with what Warren Buffett did, with what Charlie Munger did, and they sort of both started out being taught by Ben Graham, buying cigar butt businesses. They probably didn't do too much of the early stage stuff that Li Lu did, but they certainly transitioned towards buying higher quality businesses over time. And that sort of led Li Lu to talk a little bit about basically his biggest influence in his life probably ever, and that is Charlie Munger. Now, he said that he, by just absolute chance, met Charlie Munger in about 2003, 2004, and Charlie Munger decided to become an investor in Li Lu's fund. And I knew that story. I knew that Li Lu and Charlie Munger knew each other well, and I knew that Munger was an investor in Li Lu's fund, but I didn't really realize how close their relationship actually was. And Li Lu went on to say that he basically had dinner every Tuesday night with Charlie Munger for years, and Remembering that their relationship really only started in 2003, 2004. It's been going on for quite some time now. He said that those Tuesday night dinners that happened every single week really only stopped very recently. It only stopped when the sort of pandemic came into their part of the world, and they basically couldn't have those Tuesday night dinners any longer. But nonetheless, over that very long period of time, Charlie Munger has clearly had a massive influence and been a big role model for Li Lu. And that's not only in investing, but in the way that he leads his life. But bringing it back to investing, basically Li Lu described some qualities of what he would call a great business. And he basically defined a great business, again as influenced by Charlie Munger, as something that earns a high return on invested capital. Now, this is, of course, something we talk about all the time on the channel as well. And Li Lu basically said that good businesses earn a high return on invested capital, but the really, really good businesses can keep doing that over a long period of time. One of the things that a high return on invested capital does is it attracts competition, because everyone wants a high return on invested capital. Everyone wants to invest $1 into a certain business or a certain industry and earn a very high return on that dollar. So in order to make a great business, you have to have some sort of characteristic or enduring quality or moat, as Buffett and Munger might call it, that allows that business to earn a high return on invested capital for a long period of time, because that really goes against the natural order of things, was kind of how Li Lu put it. And over time, your results as an investor will very closely match the long run return on invested capital that that business can earn. But he also talked about trying to buy these businesses still at reasonable prices below intrinsic value. He basically said that if you can buy one of those businesses below intrinsic value, it means that if you get into that company and you are wrong, it's probably unlikely you're going to lose a significant amount of money. And if you're right and they do earn that high return on invested capital for a long period of time and have a long runway for growth, then you're likely to do quite well as an investor in that business. The next key takeaway from me was when Li Lu got talking about, or got asked at least, what he does differently from other investors. He has a much better investment track record than other investors, and he was really asked, what do you do differently? How are you achieving this? And Li Lu basically said, well, he doesn't quite know what other investors do because he doesn't pay any attention to them. And I think that's quite a key insight actually from Li Lu. But these are kind of a few of the things that he does with his time, how he spends his days in terms of trying to be a good investor. So he basically says that he spends as much time as possible just studying businesses. He doesn't pay that much attention to, like I say, what others are doing, or short-term price movements, or macroeconomics, which I'll get to in a second. He really just tries to spend as much time as possible studying companies. And if there's some company that he can't understand, he will just keep studying it until he gets it into a circle of competence, and until he does really understand it. He'll just keep working and working and working on that business and on that industry until he understands it well enough to be comfortable putting a big percentage of his net worth and of his fund into that company should it get to the right price. And he says, sometimes you can work on these things for years and finally feel like you understand those businesses and the price is just out of your range. And in that case, it goes on a watch list and he kind of just keeps an eye on it and hopes to get a swing at it at some point. But that's kind of the way that he runs his days. And he says that it's also really important to tie that in with being very intellectually honest. And that's something he touched on a couple of times. So not everyone can understand every business, and industries and businesses change over time as well. So it's really important to be honest with yourself and, try and understand what you don't know and what you do know, and be able to, argue against someone who perhaps disagrees with your view on a particular company or business or industry. Being able to argue against them better than the best person out there on that side of the argument. So if you've got someone that is short some particular company, you're able to rebut all of their points far better and understand their negative viewpoint far better than they do. That's kind of the level of certainty that he's trying to get to with his investing. Like in many of these investing interviews, he was of course asked about his opinion on the market right now and on macroeconomics. And Li Lu basically said this, and this is probably expected if you've followed probably any value investor for any period of time. He said, we don't pay much attention unless it's extreme. And right now it probably is a little bit more on the extreme side in terms of what's going on with interest rates and money printing and quantitative easing and all sorts of stuff. But he said it really doesn't affect the way that he invests. He buys durable businesses that can really survive just about any economic environment. And he says that, these wild swings and fear and greed in the stock market actually help him. They actually help him to buy good businesses at cheap prices when people get fearful, and it helps him to be able to potentially sell businesses should they get really expensive. Okay, so the next topic that Li Lu talked quite a bit about, which was again a key takeaway for me, was some of his thoughts on investing in China. A lot of Himalaya Capital does invest in China, and this really particularly caught my attention because just in the last week or so we have seen Charlie Munger actually put on a big position in Alibaba, which of course is a Chinese company. So he basically went on to say that about 10 years ago, he did an interview with, I think it was Bruce Greenwald again, I might have to check the exact facts on that, but he basically came out and predicted that China would be an increasingly important component in the global market, and that prediction was exactly true, and his prediction remains the same. He thinks that will continue to happen over the next couple of decades, and he said that the sort of economy in China is changing somewhat. So 10 years ago, China was very much a trade-focused economy. They now are one of the largest traders in the world. So when you grow to that point, it's hard to grow much further if not everyone else can keep up with you. So the country is sort of transitioning to more of a consumer and retail kind of based economy, a little bit like the US. And he said that last year in 2020, China was actually the largest retail market in the world for the very first time. Granted, it was an unusual year, but the middle class in China is growing. They are spending more on consumables. They are no longer having to focus quite as much as just putting food on the table and having the basic necessities of life. Of course, there are plenty of people in China still in that situation, but to a larger extent and a growing extent, there are more people with sort of surplus discretionary income to basically just spend over and above their everyday basic needs. And in summary, he said that China is a great place for value investors for two main reasons. He said, firstly, many of these industries are growing very quickly, some faster than others, but there are a lot of tailwinds behind China and particular industries in China. And the other thing he said is that mostly the stock market in China is filled with investors that are not as mature as they might be in the US. So for that reason, you have a lot more people focused on short-term trading in and out of stocks. You have a lot more volatility in the stock market. The booms and bust cycles tend to happen a lot more quickly, and it means that good businesses get mispriced more often. And like any good investor that really knows the intrinsic value of different companies and is able to assess that for different businesses, the more wildly that price fluctuates in and around intrinsic value, the more opportunity you basically have to make money. And for that reason, Li Lu really thinks that China is a fantastic hunting ground for the rational value investor. Okay, so two final topics that Li Lu talked about that I want to cover in this video. The first one is the auto industry and electric vehicles. And this is an interesting one because Li Lu has quite a big holding in a business called BYD. And so does Charlie Munger, as influenced by Li Lu. And actually so does Berkshire Hathaway. They actually had a relatively modest position in BYD. But it's gone up so much, particularly in the last year or two, that it was actually featured in Berkshire Hathaway's top holdings in their recent annual letter. So really interesting to hear some of Li Lu's thoughts on the automotive industry. He basically said autos are a massive industry and it's a really tough business. And there's sort of a few things all kind of hitting at once for many of these automakers. So he said we've got things like electrification, like ride sharing, like autonomous driving. All of these big mega trends in the industry basically all hitting at once, and it's not like they can spend some time on electrification and then the business can spend some time on ride sharing and autonomous driving and all that sort of stuff, maybe 10 or 20 years apart. It's all kind of hitting at once, and he thinks that for that reason there's a lot of new players and new entrants kind of coming into the market. We've certainly seen that in the US with a lot of IPOs of electric vehicle companies. Some are much more high quality than others, some very, very low quality. Won't mention any names here, I'm sure you know who those are. Li Lu actually asked which businesses he thinks will succeed, and he said, a few things are basically certain, and that's that electrification and so on will continue out into the future. There will be more electric vehicles on the roads in 10 years than there are today. That is almost certain. But he really doesn't know how to pick a winner, or at least he didn't explicitly come out and say one, other than to say he will let his money speak for himself. And that was a reference to, firstly, his holding in BYD. If you really want to get into the weeds, you could potentially look at the Apple position in Li Lu's portfolio. That is actually quite a recent addition, and one that surprised me personally, because Apple looked relatively expensive to me at the time that he made that investment. But Apple are also working on electric vehicles as well. Of course, it's not a big component of their business at all yet. It's, I believe, $0 in revenue for now, but we will see how that one plays out. And the final thing I will touch on from this talk from Li Lu is basically 3 points of advice, or 3 tips that he would give to younger investors that are just starting out in this industry. And he really basically said that, firstly, you have to adopt an owner's mentality when you invest in the stock market, when you buy businesses. He basically tells all his young analysts, if you were to have some relative pass away and leave you all the shares in a company, you own 100% of the business, and you have to make a decision on whether to sell that company or continue holding it and having it operate. He said he wants you to treat every business that you ever invest in like that, because that really puts you in a very different mindset. It means that you will work a lot harder to understand that business than you might have otherwise if you just treat it as some random stock. He said if you really treat yourself like an owner of the company, you will analyze that very, very deeply, and before you make any decision, you will understand the business extremely well compared to how well you might have understood it otherwise, and how rationally you may have made decisions otherwise. So that's the first thing, is adopt an owner's mentality. The second thing he said was to maintain intellectual honesty, and this goes back to something I spoke about earlier in this video, with basically just being honest with yourself, admitting what you do know and what you don't know, and trying to continually challenge your beliefs when it comes to a particular company. You should be able to, again, argue against the strongest short seller that they have on the other side of some business you're invested in. You should be able to understand their points better than they do, and of course argue back and have a good rebuttal to their points. So maintain intellectual honesty, listen to those short sellers, listen to other people, but make sure you understand their viewpoints and before you sort of make an investment, which is obviously betting against what they're doing, make sure that you can argue against them better than they can lay down their case. So that's the second one, is maintain intellectual honesty. And the third one was a little bit of a longer point, but he basically said devote as much time as possible to studying the history of businesses and great business people. And that again goes back to something Li Lu mentioned in terms of how he operates perhaps a little differently than other investors. He doesn't spend his time focused on short-term news and daily fluctuations in stocks or anything like that. He simply tries to understand as many businesses as possible. And he really was talking about here understanding the history of businesses and how different companies got to where they are today, or why different companies no longer exist today. And also great business people. It helps you basically turn over a lot of stones, understand how businesses work, what makes a good company and a bad company, and a good investment and a bad investment. And the more sort of runs you can have on the board in terms of understanding how those different companies have operated in the past, that will really help you inform decisions that you'll have to make as an investor moving forward. So there you have it. That is my summary of the recent interview that Li Lu did with Bruce Greenwald. It's really great to hear from Li Lu every now and again. We don't get exposed to interviews from him anywhere near as often as I would like to, so great to see it when these things do come out. I learned a lot, and it's great to see how much I can actually relate to a lot of the things that Li Lu was saying, and try and tie that back to my own investing strategy, which was fantastic. Now, Li Lu did also spend a little bit of time talking about some of his philanthropic endeavors towards the end of that interview as well, so I also highly recommend going and checking that out. But that's it from me today. I do hope you enjoyed the video. If you did, please hit like and hit subscribe, and I will see you in the next one. Cheers.